Okay, let's get going. We've got our guest in the room with us, Do Kwon. So, as you all probably have heard, there's been a big splash in the Bitcoin space in the last week or so when the founder of Terra, Do Kwon, made a massive announcement, actually, probably the biggest announcement since MicroStrategy came on board and announced that they were going to start buying up Bitcoin. And the announcement was that Terra would purchase up to $10 billion worth of Bitcoin to back their stablecoin UST. Of course, that's just a massive declaration, and we're all just watching it starting to unfold as we track the wallet accumulate more and more Bitcoin. So I thought I'd reach out to Do and see if he'd do a spaces with me, and he was kind enough to say yes. So we've got him here today. I've just requested that he come up on stage, but not sure he's yet accepted, but he has DM'd me, and he's definitely going to attend. Oh, there he is. So, Do, if you can see that invitation and just accept that, come up on stage, and we'll get this started as soon as possible. So let me just see. Invite to speak. I've done that. Is it coming up? I wonder if it's going through. Yeah, not sure what's going on, but look, that's a massive undertaking by any organisation. And to put that into context, it's going to be at the moment, MicroStrategy hold just over $5 billion worth of Bitcoin, and so by the end of that, by the end of Terra's accumulation, they're going to have almost double what MicroStrategy is holding. It's a massive undertaking. I've got some questions around that, accumulation strategy, valuations, and the like, and also just to get a little bit more in depth into what the strategy is, what the thinking is. Hi, Do. How are you?
Hey, thanks for having me.
Yeah, man. If you can hear me all right, we'll get right into it. Really appreciate you coming on board.
Yeah, sounds good.
Hey, let's get
Let's do
into
it.
it. Have I got the announcement right? Initially, you said you've got $3 billion up front that you're going to invest in Bitcoin, and up to $10 billion in Bitcoin to back your stable currency UST. Have I got that right?
Yeah, so the easy way to understand this is as USD grows, we're going to be using a part of our seigniorage to purchase Bitcoin. Now, if you look at centralized stablecoins like USDT or USDC, every time that new units of stablecoin are minted, the seigniorage, i.e., sort of the sort of the gains that are made by minting the stablecoin, are used to acquire bank deposits. Or different centralized issuers have some diversified risk portfolio. They sometimes buy bonds, sometimes some cryptocurrency. But the idea is that usually you would buy centralized collateral. Now, what Terra is doing is a little bit different because it's choosing to purchase Bitcoin to build sort of a decentralized forex reserve, if you will, for its stablecoin.
Okay, and why are you doing that?
Yeah. So if you look at every pegged currency system, they usually maintain forex reserves made up of foreign currencies or highly liquid bonds to meet short-term fluctuations in the demand for their currency. And that's because for lots of different reasons, demand for their currency can fluctuate. So for example, there could be like an international crisis like a war that would impact currency demand. There could be some unnatural fluctuations in imbalances in imports or exports. But in any case, governments have a lot of monetary policy levers at their disposal to stabilize currency pegs. But it turns out that most of these operations are a little bit longer term than something that needs to calm markets right away. So, which is why having a steady hand of reserves right away in order to make sure that you can meet some of that short-term demand is necessary for an effective currency system. So now, drawing an analog to crypto, a lot of people that are designing stablecoins are obsessed with this idea that you need to, either fully collateralize or over collateralize a stablecoin. This is actually not the case. The only thing that matters when you're designing a stablecoin is deep liquidity at the peg. So, which is when I want to get a dollar out of, by redeeming the stablecoin, can I do it right away without, having to wait or having to pay exorbitant fees? And vice versa, if I want to mint a stablecoin, can I do that same thing? And it turns out that Bitcoin is great because it has two great properties. Number one, it is decentralized. So the downside of lots of centralized stablecoins is, I think in the future they'll definitely have a use case, but the idea is that that sort of compliance creep that we've seen, come into our fintech stack and the bank stack is probably going to take place in centralized stablecoins as well. They can be censored now. They can be frozen. They can be altered by its issuers. And I think over time, like companies like Circle and Tether are going to be regulated more and more like banks are. So, which means that a lot of the compliance overhead that is built up in our fintech stack is going to find themselves in our centralized stablecoins as well. Now, what the decentralization property that Bitcoin has allows a stablecoin to be backed with a strong neutral asset without having to compromise on that core tenet of decentralization, which means that anybody can transact with it, can hold it, can trust it as a store of value to protect their household savings, without having to worry whether the assets are going to be seized or censored by an issuer or whichever regulator can hold that issuer hostage. The second is, you know, uh, there are other types of cryptocurrencies that are decentralized, but Bitcoin is the most scalable. It is the largest, right? So, which means that as Terra starts to acquire different types of reserves in almost any other asset, if we were acquiring this particular asset to build up the reserves, or during the time of a currency crisis, if we had to use these reserves in order to redeem Terra stablecoins, it would definitely make an impact. Whereas for Bitcoin, in most likely scenarios, it would not. It is deeply liquid. It is very large. And it's going to remain that way and get stronger over time.
Okay, interesting that you've chosen Bitcoin. And before we get into the deeper philosophical arguments supporting that, we've heard a lot of traditional companies sort of shy away from Bitcoin as a reserve asset in their treasury because of the volatility. And I'm interested in what your approach to dealing with that, or how you'll be able to mitigate that in your operations.
Yeah. Well, so I think that really depends on the perspective that you're taking, right? So I think in crypto, out of any asset that maintains decentralization, Bitcoin is the least volatile, right? For anything else, you do have centralization exposure. So if you were using centralized stablecoins to back a decentralized stablecoin, for instance, then that would sort of defeat the entire purpose altogether, right? Because the entire purpose of a decentralized stablecoin is a crypto dollar that can't be seized or altered, right? So if you're looking at this from the universe of decentralized assets, Bitcoin is pretty much the only option.
Okay, so you're optimizing for decentralization, anti-censorship, and all the rest of that, and you're saying if there's volatility because of the asset class that we choose to back up our stablecoin, so be it. We're optimizing for something else.
Yeah. Not only that, I think as I think one of the interesting things about Terra doing this first is that you're starting to see different avenues for demand and use cases for Bitcoin build up on other crypto systems. And interestingly enough, we are not the only people that are doing this. So just a couple of weeks ago, the Avalanche Foundation announced plans to build a native Bitcoin bridge into the Avalanche chain, which means that a lot of the DAOs and communities that are building on top of Avalanche would also start to use Bitcoin as a reserve currency. So I think as a lot of communities start to embrace Bitcoin and build utility around Bitcoin and to weave it into their smart contracts, into their DAOs, I think the volatility of Bitcoin would only diminish over time.
And just on that volatility, yeah, and especially in relation to, shall we say, the rest of the crypto ecosystem, which has probably, when the market seems to, shall we say, experience high volatility, they all sort of converge to one. It doesn't seem that any particular sector is resistant to that. So if Bitcoin experiences a great deal of volatility and the rest of the crypto markets follow, how will that impact your operations and the ability for people to redeem?
Yeah. Well, so I mean, I think it is a reasonable scenario that if there was a lot of Bitcoin volatility that were to hit the markets very soon, that we could end up buying Bitcoin at a relatively higher price, and then people could end up redeeming USD against those Bitcoins at a cheaper price. So, as in, the protocol reserves could have bought Bitcoin at a loss. But that is not to say, I think over the long term, we plan to be doing this for a very long time, right? Which means
Hmm.
that when we say that we are buying, $3 billion worth of Bitcoin, that's just a start. So essentially, what we're doing with this is that we're aligning the growth of UST with reserves in Bitcoin. So insofar as UST keeps growing, a part of that seigniorage is going to go to buying Bitcoin to build up the reserves. So in terms of short-term volatility, I think there would be cases where our P&L isn't great. But I think over time, if you believe that Bitcoin, because it is scarce, because it is the centerpiece of the crypto industry, then in that case, you have to believe that a reserve strategy is going to be strong in the long term.
Yeah, would that also work in reverse though? That scenario of volatility upwards, but what about volatility downwards as a risk?
Yeah, exactly. So what I mean is, if you encounter situations where uh, the price of Bitcoin is falling so rapidly, and the price of Luna is also falling, and at the same time, a bunch of people plan to redeem all the USD at the same time, then in that case, I think that would be problematic. But actually, like USD already survived about a 75 to 80% price fall in Luna, while at the same time there was about a 33% contraction in the stablecoin uh, demand happening all at the same time. So we know that even without exogenous collateral, it's already been through a lot, right? And survived. If we add Bitcoin, it's only going to make that stronger. Now, the downside is, while I don't think USD is going to depeg, it could be expensive for the reserve if it ends up buying Bitcoin at a relatively high price and allowing users to redeem when crypto markets have crashed at a relatively lower price. And I think that's a short-term price that we pay for using collateral that is truly decentralized. And I for one, think our community should be glad to pay it.
And so let's talk some numbers just at a very high level. Initially, the announcement was 3 billion rising to 10. You said you've already got the 3 billion to commit to Bitcoin purchases. Can you just tell us a little bit about where that money came from?
Sure. So we raised about $1 billion in an OTC sale to VC firms, I think a couple of months ago. And then the other 2 billion we donated from Terraform Labs to the nonprofit foundation, Luna Foundation Guard, and then we sold about $2 billion worth of Terra stablecoins. I think the last tranche is still in transit, but that leaves us with about $1.4 billion in Bitcoin that we purchased, and then I think about $800 million worth of Tether, and the rest in Terra stablecoins or Luna.
Okay, and so I'm looking at your the wallet. I'm assuming it's the only one that's accumulating your Bitcoin, and it looks like there hasn't been any accumulation for this is the fourth day. Can you tell us a little bit about your acquisition strategy, why the pause, and when you might resume?
uh, well, so we plan to be relatively price agnostic with these purchases. So we plan to be doing these in a regular cadence. Um, but that's not to say that we can't time the markets at all. And I think we're just trying to be prudent traders a little bit here.
Oh, I see. There was a little bit too much steam in the market, was there?
Yeah, I think, look, so like one thing that I absolutely want to stress is that even when we were buying these clips every day, or I think in one day it was like almost two a day, um, for an asset like Bitcoin, it sees about $20 billion worth of turnover every day, right? And then there's also pretty healthy demand in the OTC markets.
Yeah.
So if we did this quietly, $150 million a day would not move the markets at all, right? I think even with this, I would attribute, the the small price fluctuation that we saw more to the equity markets being fairly bullish around the same time, rather
Hmm.
than
Hmm.
like us having had anything to do with it. I think just people spun it out of context into a narrative that just wasn't quite there.
No, I agree. I agree with that. And just to sort of back up my agreement with you is Michael Saylor's alluded to his acquisition strategy, and I believe at one point he did acquire more than $1 billion at one time when he did raise capital. And the way he described it is essentially as he's purchasing constantly throughout the day in microtransactions until they accumulate what they want. And his words were, "You won't see me in the market when I'm buying." And I believe he's also shared that playbook with Elon Musk, and when he bought through Tesla and SpaceX is his other company. Uh, I don't recall anybody really detecting anything in the prices at the time. But just one more point on the price fluctuation or price movement. The price was already moving 13% in the lead up to your announcement or your first purchase, and then 13% since. So it can hardly be said that you moved the market, but I'm sure it contributed somewhat. Um, just going on that, you're choosing to buy OTC. Is there a reason for that and not on the market like Sailor has?
Yeah, so unlike Michael Saylor, I have a day job, so I can't sit on a Binance screen and do executions myself all day. That's the only reason. And I'm not much of a trader, so if I felt like I could personally do executions and do better, I think I would have done that. But I think it's going to be OTC for us.
Yeah, no, I mean not to push any particular exchange, but I think one of the major ones, starting with C, has a service that I think Michael engaged or MicroStrategy engaged. So they seem to be the go-to shop at the moment, but I'm not sure. So um, interesting. Okay, so you're doing OTC simply because, well, when you've got to get it done, you just get it done. Is that how it works?
Yeah, pretty much.
Cool. And you've stopped because you just want to let the markets cool. There was a bit of momentum in broader markets, equities, and that's probably spilled over into crypto as well, and probably spoiled your game. Um, and sort of, I guess, following on from that, everyone's really curious about why did you announce it before buying then?
Yeah, so it was a couple of factors. I mean, first is, well, so for guys like MicroStrategy or Tesla, these are acquisitions by corporate treasuries, right? In the sense that they're making a prop bet. So it's not strange at all if at some point they decide to sell this Bitcoin, and at some point they will. For LFG, it's a little bit different because it's supposed to be a backing reserve for the stablecoin. So in the sense that we're making a pretty important change to how Terra USD operates as a stablecoin. It's one of the major stablecoins. So in that case, like as we do this, it's important that we tell our communities what we're doing, why we're doing it, and I felt like this transparency was important first. And second, uh, LFG has a pretty sizable board, and then several of the representatives of that are sitting on the board work for places like, let's say, Jump Trading or Delphi Digital, which are all well-known, fairly established firms in the industry. So while we have a lot of faith in the um, individual caliber of our directors, it's just too many of them for the news to not leak, right? And then in that case, like you sort of create this information asymmetry where all the insiders know that there are major purchases going on,
Mm-hmm.
but you know the everyday trader does not. So
Yeah, I think that's
yeah,
fine. I don't think you're impugning the reputations of your directors. It's just a numbers game, isn't it? When there are so many of them, then you just got to mitigate that risk of a leak into the marketplace. Fair enough. And so you don't think that there's any sort of market moving dynamics in your purchasing behavior, but you just wanted to let the market cool because of broader sentiment. Would that be a fair assessment?
correct.
Yeah, okay. We've already covered where the money's coming from. What are you going to do with the Bitcoin?
Yeah, so there's a pretty interesting post called the Bitcoin Reserve on our main resource forum. It's agora.terra.money. So it's basically creating pretty tight liquidity for UST against Bitcoin on a smart contract on the Terra blockchain. So the idea is that at any given time, somebody can trade in 1 Terra USD and then retrieve something close to $1 worth of Bitcoin in return, in redemption, and vice versa. You can always mint 1 Terra USD by trading in $1 worth of Bitcoin. So what this does is that as USD increases, the size of the Bitcoin reserve goes up, and then at any given time, a trader may redeem that Terra USD for $1 worth of Bitcoin. So it sort of deepens the liquidity for Terra stablecoins around the peg very tightly.
Can I just interrupt you before you get onto the other part of your answer? So does that mean so you got 3 billion upfront in cash? You're going to purchase 3 billion. You're going to use that 3 billion to purchase Bitcoin. If that, let's say, Bitcoin triples in value or rises in value to meet your $10 billion initial target, does that mean that you have satisfied your ambitions for Bitcoin acquisition?
No. So 10 was just like a random number that I threw out there.
Okay, very random.
Yeah. Well, it's just basically the idea is that we would. I mean, you can see a scheme whereby as UST grows, more and more Bitcoin is going to end up in this reserve.
I see.
So we're never going to stop, right? As UST keeps growing, the size of this reserve is going to keep growing.
Oh, okay. So it was really just to put a number on your ambitions, that it's quite a large undertaking, and that although you'll be done quite shortly, probably within a month or two of spending that 3 billion, it's your long-term intention to continue acquiring Bitcoin to back UST. Is that right?
Correct.
Yeah,
Or
and 10
rather,
billion is just the marker.
yes. So the 3 is what I would be doing, and then for the rest of the Bitcoins that accumulate, hopefully in perpetuity, it's going to be whatever trader decides to mint UST.
Okay. And locking up the Bitcoin in the smart contract, as you put it, does that preclude you from undertaking any activities such as earning a yield on it?
Correct.
Oh, so it's essentially dormant, locked up, and, well, I was going to say unproductive, but it's a store of value and it's backing your UST. But for the sake of from the financial point of view, it's not possible to earn a yield on that in the future.
Correct.
Oh, okay. Damn, I was going to ask you about yield generating possibilities in the ecosystem, but that's all right. We can we can move on from there. And so, based on what you said earlier, then pretty much no other asset could have been considered if decentralization was your primary hurdle. All the physical commodities were ruled out immediately, and that pretty much left crypto, which most of them don't hold a candle to Bitcoin for decentralization. So you ruled them out at that first hurdle.
Yeah. So we weren't considering any centralized assets at all. So we did debate pretty intensively internally about like what types of digital assets to include, right? So and then inevitably, Ethereum came up, and then we discussed what does it mean for an asset to be a reserve asset, right? And it turns out that while we believe that it is not impossible for Ethereum to outperform Bitcoin, right, in terms of price appreciation, that's not what you should be shooting for with the reserve asset. Like the point is that when it goes down, it should go down less. One. And number two, it should be less immutable. So, for example, if we were to build a bridge into a code base that changes more frequently, then in that case, the security risks and the maintenance risks of keeping something like that together increases as well, right? And secondly, there's a political dimension to this that isn't quite economic. So, for example, Terra's goal is to be the largest stablecoin across all crypto ecosystems, not just the Terra blockchain. So we got to about 16.5 billion, with the primary use case being Terra stablecoins used in various different types of DeFi apps and real world payments. mostly using Terra blockchain infrastructure. But our goal is to be the dominant stablecoin across everywhere, like be it centralized exchanges, on Ethereum, on Solana, on Avalanche, and so on and so forth. Now, it turns out that if you, like any sort of smart contract asset, be it Luna, be it Ethereum, be it Solana, happens to be tribal in nature, which means that if you take Solana collateral and then take it to Avalanche, they don't like it. If you take Ethereum and take it to Solana, they don't like it.
Who doesn't like it? You mean it's from a technical point of view, or people who use different chains?
People don't have as much faith in the collateral because
I
they have way more faith in the native staking asset of their chain, right? So Solana users would much rather prefer seeing Solana be used as reserve currency rather than Ether. And vice versa, I'm assuming that Phantom users would much prefer FTM to be used as a reserve asset than Ethereum. But the one asset that isn't tribal, that every user in crypto takes as the most neutral, the most credible, is Bitcoin. Like, I've never met a crypto user that questions the viability of Bitcoin as a reserve currency.
So it's
And
not
that
just the
political
main.
dimension.
Yeah.
And that political
Bitcoin.
dimension, yeah, and the
Sorry.
ability to cut through tribalism is what makes Bitcoin so strong.
Okay. I heard you on another podcast. I think it was you were speaking to someone from Stanford, and you made a comment that pricked my ears about being backed by a price index of non-nation state currencies. And that was about 7 or 8 weeks ago. Have you got anything more to add on that?
Sorry, what was that?
You made a comment about backing UST by its own. I think your exact words were by its own price index of non-nation state currencies, plural.
Huh. I don't remember that particular comment, but I guess that discussion was probably coming from, okay, what happens if like the USD becomes depegged and like the world burns? Like, what will you peg yourself to then? Well, so the great thing about like Terra's infrastructure is that it has multiple stablecoins, and then each stablecoin can be swapped at each other at whatever the effective FX rate is, by paying a very small Tobin tax. So even if like the USD were to go up in flames, you could technically swap yourself into I don't know, like some crypto price index that is more inflation resistant, hypothetically.
What
Right?
would that look like?
Ooh, good question. So I mean, like technically, like all these fiat currencies are supposed to peg itself to whatever basket of goods and services that people buy the most, right? But the CPI as it looks today are basically the bunch of things that people used to buy in their 70s, right? Like who buys corn? Like seriously, right? So I guess if you were to create a crypto native price index, I don't know, like include some Bored Apes, maybe the DeFi Kingdoms game token Jewel.
Come on, you're not being serious, right?
No, well, yeah. So I mean that is going too far, but I think it would most likely try to approximate a set of indices that um, people like to buy and consume on the internet. So it could be things like, for example, uh, we could try to peg ourselves to mining difficulty, for instance, or the price of electricity, which we can approximate by the amount of people that are participating in various consensus systems.
Okay, interesting. All right, that might be something to explore more at a later date. Hey, I want to talk to you about the Bitcoin marketing halo. Do you know what I mean by that?
No, what is that?
Well, the marketing halo is that there's a sort of marketing benefit that Bitcoin seems to confer on to various organizations, people who get in touch with the ecosystem, who become advocates for it. And so we've seen this in play. I think Michael Saylor has been open about the effect it's had on MicroStrategy in its ability to open doors. There's so much more publicity for MicroStrategy. The brand has grown enormously as a result. People take calls, return calls as a result. Business is growing. Staff retention, all the rest of that is going up as well. And we've seen that with politicians. Increasingly, more and more politicians have realized there's a large constituency in support of Bitcoin. And as a result, they found it to their benefit to come out in support and advocacy of Bitcoin policies or pro Bitcoin policies. And I wonder how you feel that might apply to Terra, Luna, UST, and the like.
Yeah, that's a good question. I would say, I mean, look, at steady state, a stablecoin is supposed to be a deeply uninteresting instrument, right? So, for example,
You mean from a functional point of view?
Yeah, but like if you look at USDC, there's no USDC community, right? Like people just use it because it's useful, right? And I think for most people, they don't even know who the CEO of Circle Inc. or Circle Consortium or whoever that is. It's because it's become very useful and most people touch it, but it's supposed to be boring. And then the same is the case for Tether. So I think for decentralized stablecoins, but I think there was a time when like everybody was talking about Tether, right? Like in 2017 timeline, when stablecoins were still fairly new, and then you could finally start trading things against something that was USD stable. I think a lot of people quite liked it. Now, but over time, that sort of becomes boring because like a stablecoin doesn't pump. I think for decentralized stablecoins, we're in this weird transitionary phase where a lot of people are saying, "Oh, like my stablecoin is better than yours," because there's a lot of risk, either real or perceived, and they're all growing really, really quickly. So I think definitely, like if we can grow the size of our community by getting people that otherwise wouldn't have been interested by diversifying our collateral into something that's larger, I do think that there's positive marketing benefits of doing this with Bitcoin.
Do
But I
you
think
think Bitcoin is has that unique property in the ecosystem that it will do that, or is it just a hope of yours?
I think the bigger gain that we get is the neutrality, rather than like any marketing benefit. Because like we've been trying to grow like cross-chain presence behind Terra stablecoins for some time, and we had some reasonable success with that. Like for example, Terra USD is I think one of the most liquid stablecoins on Curve, for instance, which is like the main stable swap on Ethereum. We're integrated deeply into DeFi protocols across multiple chains. But at the end of the day, there's some psychological resistance between using a stablecoin that isn't backed by either like the main major asset of that ecosystem or something that's larger, right? But I think what the Bitcoin announcement did that helps us a lot is that people it has that neutrality, right? So like user of any ecosystem, they might question the viability of Luna as collateral, but they don't question Bitcoin. And I think that's the biggest gain that we get, that we're able to build greater trust in our money.
So, we're getting into more controversial territory, and for the sake of interesting conversation, allow me to put my borrowed hater or maximalist hat on and say this is just a similar play to the US dollar where they backed it by gold, gained a bunch of credibility, and then rug pulled. What would you say to that?
Well, so what I'll say is we're still in the capital accumulation phase, so it's a little bit hard for me to say, hey guys, don't worry about it, trust me. So we're not there yet, but I mean, where we plan to get to is to put the Bitcoin reserves into a smart contract, right? And once we get there, like insofar as the reserves sit there and there's no operator key, I think it will still be very useful, and there's sort of like you eliminate that ruggability, quote unquote.
Yeah. Okay,
Don't
so
take my
you're not
word
going
for
to.
it.
Sorry, go on.
Yeah, but don't take my word for it. Let's see what happens over the next few months.
Oh, yeah, I absolutely agree, and sort of, I mean, I don't regard myself as a hater or a maximalist, but it makes for an interesting question. Look, from my point of view, let's say that you were to rug pull and dump or whatever on the market, but I think it's fantastic what you're doing for as a demonstration for others in terms of what Bitcoin can do for the adoption of your broader ecosystem, the blockchain, the stable coin. It demonstrates confidence in Bitcoin. I think it's fantastic for Bitcoin. Now, I've read many skeptical and some might say cynical threads and takes on what you're doing as well, and they're welcome to their positions and opinions. I just find them interesting more than convincing, and I sort of lean towards what you said and let time tell. We'll see over time what happens and what transpires. But for now, I can't be anything less than positive about someone buying what, 1 billion for on the market. Yes, please, I'll take that. I'm very enthusiastic about that, and so let's see how that plays out. Hey, so you're not going to dump on the market?
I am not.
Okay, all right. So we got that one out of the way. Um, hey, why a stablecoin? Why not just use Bitcoin on the Lightning Network as such? What's the utility of a stablecoin over and above that?
Mm. So I think for most crypto users, they're perfectly fine doing payments in Bitcoin or Ethereum or various other things. But I think there's two elements. Number one, for casual users of crypto, and I think we're finally at a phase where you're starting to see casual users of crypto. So without having to like live and breathe crypto, there are people that might want to try out, God forbid, like buy an NFT or like uh, trying to pay for something because it's interesting or things like that. And then I think the first hurdle that they get to is the fact that the price changes so frequently. So I think for casual users, it just makes sense to have like a digital dollar that is wrapped in a crypto native context, in the sense that you sort of have the same rails so that they can see what it's like to send money across borders and have it received in just a matter of seconds or minutes, right? Without having to do any KYC, or to try out their first DeFi app, or to try buying their first NFT. And I think for this, most people tend to, gauge, price stability in context of whatever their current, local fiat currency would be. So for Americans, it would be the US dollar. For Koreans, it's going to be the Korean won. And I think it's important to recreate that experience so that you can still get casual users comfortable with using crypto as well. Um, so that's one. And number two, I think, with volatile crypto assets, it's kind of difficult to do complex contracts, especially if these contracts have some time delay in the execution. So, for example, if you're trying to sign an employment contract, let's say that you could do this on chain, or like you're a crypto firm and you want to hire somebody, and then you want to pay wages in some sort of crypto context because like you 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 don't have the operations to justify hiring 40 people just in one country. Then in that case, you don't want to be paying in Bitcoin, because if Bitcoin price moons, then your firm goes bankrupt. While at the same time, if Bitcoin price tanks, your employee starves to death, right?
Mm.
So I don't think it's just a question of like you have to use stablecoins for everything. It's just that stablecoins definitely do have a use case. And I think if we're going to be using stablecoins, it's better that they're decentralized.
Okay, all right, makes sense. Hey, let's get on some more general questions, if you will. US dollar, is it and inflation? Do you think, or what's your take on that, first of all? And do you think that we're entering into a period of hyperinflation?
I think the odds are that inflation is going to remain pretty high uh, for some time, especially if you run in crypto circles. It's kind of insane because, um, you know, I mean, even for people that don't like actually do anything or are particularly good traders, like a lot of the crypto people that I just observe, like just even like walking down the street, and then I hear people that are like in Ferraris, like talking about like, oh, like I bought this coin or something like that. It's just kind of bizarre, right? So like the inflation that you can actually like feel is really really high. So I think that's probably going to continue for some time. I don't think that major fiat currencies are at any risk of becoming like basically the Zimbabwean dollar over the next 5 years. I think that's a little, we're not there quite yet, right? I think there would need to be some like massive chaos a geopolitical chaos at like a World War III type of scale for that to happen. But we'll
Don't you
see.
think we're seeing that kind of disruption at the moment through energy markets?
Yeah. Although I think in order for people to lose faith in the US dollar and sort of like the euro as its counterpart, global trade has to be disrupted at a massive scale. And people need to lose faith in the ability of the United States and its allies to be able to stabilize that peace. And while I think there's been some sort of outlier events, like for example the Russian invasion of Ukraine, disruption of energy markets, I don't think you sort of are at the phase where the majority is questioning whether the world order is going to stay constant.
Yeah, I also wonder, and it'd be interesting. I should get some views from people who lived through it. Is this worse than the volatility and the uncertainty of the markets in the 70s? Because inflation, the official inflation at the very least, was much, much higher. In the 70s, we have very significant energy market disruption as well. Prices went up by much more, though the price of oil at the very least went up by much more back then than it has at the moment. But we're starting to see. I posted the other day my domestic energy bills are going up from 40 to 60, 70%. And that's just the first increase. I bet it won't be the last before the year is out. But we've already been told about that. So interesting to see. And do you think, so for example, do you think that's going to be undermining the dollar, or will it undermine everything else but the dollar and strengthen the dollar?
Well, I mean, I think over time, if we, like as builders, if we play off this, cryptocurrency experiment, quote unquote, right, then in that case, like we would hasten the dollar to its inevitable decline. But, um, like I would say that rather, like the stuff that's happening now, if we agree, if we can agree that the dollar is not having its existential crisis just yet, then I think it's just going to make a low impact. But let me ask you this: don't you feel like a lot of the inflation is going to lag all the money printing that happened over the last 2 years? So what I mean is, like during COVID, most people weren't able to spend that much on things that actually impact the real economy, right? Like restaurants were closed. It was really annoying to go to shopping malls to have to buy stuff. Um, and supply lines were shut down. So like even if you wanted to buy like a nice car, you would need to wait for like 18 months for one to ship to you. You couldn't like, fly to Bali first class and spend it on stupid stuff. So um, I just wonder how things are going to change when people can spend more freely, like the entire world can spend more freely as COVID restrictions lift across the world. And in Asia, it's still, I would say, fairly locked down at the moment.
Sure, I agree with your assessment on that. And there's also the issue of not only people being able to spend, but also wanting to spend. And then on the other side, the supply side, people returning back to work, being able to produce enough on time through the supply chains and deliver things into markets, resorts, airlines, that sort of thing. I mean, I can't ever remember in all the time I've lived in London that we've run out of products. But now it's just the norm that, I got to the supermarket at 7:30 p.m. So of course there's no chicken left. It's just the standard now, and I've got to wait until the next day for another resupply. It's quite common now for certain cheeses to just not be available for days. So if I want feta cheese, which I love with breakfast, um, it might not be in stock at one of the largest supermarket chains in the country for days. So this is something that I haven't experienced before in my lifetime. So there's definitely an inability to fulfill demand, but there's also an unwillingness, perhaps, of people to spend as freely in their broad spectrum of spending habits, and perhaps they're just concentrating much of their spending in certain behaviors that are much more convenient, like online, for example. That might be one of the things. Do, I really want to thank you for making yourself available. Would you be open to taking a few questions now?
Sure, of course.
Let's see who's on. We've got a bug-eyed yellow profile picture, but I suspect that might have some affiliation with you. So we'll just put them to one side. If you have a question, please request it, and I will work through all the requests and bring one of you up. Okay. It's not much in your profile. If you've got a detailed profile, it helps me decide whether or not to bring you up. Yeah. So please do that. Alrighty. So let's go. Okay. Alexander. So when you come on, Lord Alexander, just unmute your mic, and we are ready for your question or your comment.
Hi.
Go ahead,
Hi.
Alexander.
Nice to meet you all. Greetings
Likewise.
from Europe. I have one small question. When I read the articles about the buying of the bitcoins, I was thinking the whole buying process was going directly via exchange like Binance, Coinbase. But when I get you right in this interview today, you said you're starting to buying OTC. Is that correct? So you changed your strategy, or did I get anything wrong? Thank you.
No, it was always over OTC. I actually never spoke to any media, I believe, or maybe. Oh, I've sent a few DMs to people, but I never said I'm like buying anything from exchanges. I definitely don't do that.
Okay, thank you. Mac Q, go ahead, Mac. Mac, we're ready for you. Yep, go ahead.
For accepting my request. Yeah, thank you for the interview. When I was talking with a few friends of mine back in 2017-18, when I was involved heavily in a crypto exchange in Europe, we had basically the same idea. We were wondering why the already existing stablecoins don't have any BTC in their reserves, because we're all bullish on BTC, and we were wondering, since it will probably go up, and if it doesn't, then the stablecoin market kind of won't really be that important anyway. So it's a play where if it doesn't work, you probably will not have a job in the stablecoin market anyway. We were wondering why companies didn't put BTC in their reserves, and the reason was volatility. And the kind of the idea that we had to counter volatility was that maybe it would also be good to put or to invest outside of the crypto market into things like real estate investment trusts, or like create a basket of assets that would traditionally go the other way than the one that BTC would take. So if we had a significant like 50-80% drop in BTC, then you would be able to kind of help out your assets, your stablecoin position by investments that would go the other way. So my question is, I assume you will say no, probably, but have you thought about like securing your position in case we do have a BTC drop? And it is possible that we will, because of all the shit that is going on with Ukraine and all of the other, macro environment is not looking very good. We don't really know how BTC will react here. So that's the question, basically. Would you invest outside? Yeah. Mm-hmm.
Well, so I think it is definitely possible, and at some point becomes a good idea to buy some other assets. So the idea is that, for example, Bitcoin could backstop, and then like you could get something that is a little bit more stable to front stop, the demand volatility. So, for example, like the stable reserve must be exhausted, and this could be, let's say, some real estate contracts or something like that before we start to dip into the BTC. So even if there's like Bitcoin volatility in most reasonable cases, it doesn't get touched, for instance. But at the same time, it's very nice that it's there. And then even if the more centralized stuff gets censored, Bitcoin is still the majority of the reserve and is still acting as a big backstop. So in that case, the system is more diversified. It works better this way. But I think before we're able to do that and before we diversify, it's important to build up Bitcoin reserves in size. And as I said, we're still in the capital accumulation phase. So I think we want to keep things focused on sort of the crypto space before we venture out of it.
Okay, we had, thanks for your question. We had John Manser, but he seems to have disappeared.
Hey guys,
Let me see who else. Are you
can
there,
you hear me?
John?
How you doing? GM
Oh,
from
there
the
you are. Go ahead.
how you guys doing? Thanks for allowing me to speak. So one of my questions for Do Kwon really is about the in real use cases of UST. In my opinion, UST and algo stable coins are really going to be the bridge between native digital economies and the real world, and that's just because you can agree that it's sort of like a central bank, right? So with that said, is there any consideration of building in real world use cases, say for, small island nations, or for, just building out your own country where essentially, or your own city where people will be able to transact in UST and in Luna in the real world, therefore really propping up the use cases and, you know, increasing the value of it by using real world.
Well, if you know any nations for sale, please DM me.
There is a small island for sale from a recently deceased gentleman, Doe, but I'm not sure I can
There's
put
many
you in
small.
contact.
No, but like seriously, right? Because if you think about it, you made a comment about stable coins, the other stable coins, and them not having really communities that are like fans of them, but they do. It's just not popular. I would say like on crypto Twitter, but if you're using it at the point of sale for transactions, essentially it is popular. Essentially, it does have a lot of people that have an ecosystem around it because they have to use it for actual real world transactions, really getting away from a lot of the volatility. So, if you think about how people look at Bitcoin now and wanting to use it as a reserve currency, sort of like what El Salvador is kind of doing with day to day transactions, is if you look at the consideration of what you could do with UST, not saying that it may fail, but the probabilities of it failing if it's used, let's say, by 60,000 people making business transactions, everyday transactions, the chances of it failing really decreases.
Yeah, so that's a great point. But I'm approaching it from a slightly different angle. So my idea is that the initial sort of the Trojan horse use case for stablecoins is savings, not payments. And that's because if you try to bootstrap a payments network, it's very capital intensive. Whereas with savings, insofar as like your base currency has more yield opportunities than whatever local opportunities that they have, they will use it. So you can technically grow adoption at without with zero capital spent. So what I've been spending a lot of time on over the last 6 months or so is to, sort of make sure that there is a neobank or some sort of fintech service that wraps around things like Anchor and yield opportunities around Terra stablecoins, so that they can offer a savings experience with bank on ramp in as many countries and geographies as possible. So some of those things are going to are already sort of rolling out. So, for example, there's like Alice Finance or Seashell in the US. There's Cash.io in Canada. There's Astral in the UK. So yeah, so I mean, I think once people get acclimated to keeping a significant chunk of their savings in a crypto context, then it's a no-brainer for them to use some of that yield to pay for things. So payments follow savings, not the other way around.
Okay, thanks for your question, John.
Thanks,
We've
guys.
got a question here for you, Doe. What percentage of UST do you intend to back with Bitcoin?
Yeah, so that's a hard question given that Bitcoin is going to be volatile. So I can imagine scenarios where Bitcoin goes up a lot, even in some cases faster than USD growth. So I think during times you could end up in situations where Bitcoin reserves are more than 100% of USD float. I think in other cases, it could be smaller, right? But I think if you can get to some reasonable reserve ratio, let's say, 30, 40% of USD outstanding at any given time, then I think that's a reasonable target.
So initially, your 3 billion purchase over the 16 billion market cap is going to be, roughly 20%, and then you're looking to increase from there in direct proportion to the growth of UST. Is that right?
Correct.
Okay. So, but your ambition is what, 30 to 40%, but that's also allowing for the appreciation of Bitcoin in price. So it may not be through acquisition alone that you achieve that.
Right.
Okay. All right. Thanks for that. Peter, why don't you unmute your mic? We're ready for your question or comment.
Hi, guys. Thank you for the opportunity. I've been reading about how the stablecoin of UST is working, and it's an algorithmic stablecoin that uses Terra Luna in order to create new tokens, right? Are you thinking about changing the model of how this works now that you wanna back it up with Bitcoin, and also if you thought about, because for me this sounds like the 2.0 version of the old gold standard where the dollar was backed up with gold, just having in mind that Bitcoin is the digital gold. So I'm wondering if you had that thought in mind at the beginning doing this.
Yeah, so I mean, like the original architecture is the same, except you just choose to wrap around a different asset as well. So at any given time, people can trade in $1 worth of Luna or Bitcoin and get USD out. And vice versa, as you're redeeming, you can trade in USD and get $1 worth of Luna or Bitcoin. So it's really about having more user choice, which helps to increase stability, rather than designing some fundamental change to the model. So you can think about this as an augmentation, not a change. In terms of whether this constitutes, let's say, an interesting experiment in implementation of the Bitcoin standard, I would absolutely agree. So I sort of think that, so it's very interesting. So when I was in Berlin, I was in this, museum. And then we were in a room where they laid out how the coinage in the Roman Empire had changed throughout the ages. So in the beginning, like the first legion, the coin that they gave out to legionaries was made out of solid gold,
Hello?
very thick, super wide. And then over time, the coins literally got thinner and more bronze until at the end, like it kind of looked like, like that metal wrapper that they wrap chocolates in. And yeah, it was very interesting how you could sort of see the progression of how nation states opt for dilution, opt for printing as much as they could when given the opportunity. So I think we always sort of like swing the pendulum from sound money to unsound money. And I think we're sort of at the precipice of there having been so much money printed that there's a very strong argument as to why we need to adopt cryptocurrency. And I think the implementation of a stablecoin that is backed by the Bitcoin standard is going to be like one of the most interesting experiments that we've done in this direction.
Rocket Man, you're up next. Unmute your mic and go ahead.
Yo. Hey, thanks for having me.
Go ahead, mate.
Can you hear me?
Yes, we can. Go ahead.
Oh, yeah, awesome. Probably a basic question, really. I just wanted to know what your average expected price will be for your Bitcoin purchases with the first 3 billion that you're willing to spend.
We don't really have anything like that. The idea is that we'll look to locally optimize, but it's not really about getting the best execution all that much, rather than like, if we can shave off a few percent here and there, we'll try that. And if not, that's
Okay.
fine.
Next up, Midas. Go ahead. Unmute your mic, Midas.
Hello, thanks for having me. Hi, Do Kwon. Let me have there's one question is, do you plan to do anything with the Bitcoin purchase? Like, do you plan on lending it? And yeah, because you can actually generate some things with it. Yeah.
No. So keeping this brief because we answered this in a previous discussion.
Okay. Though I think I want to take the opportunity now to thank you very much for your time. We're just on 1 hour. We have taken ample questions so far, and I think we had a pretty good discussion all up. So thank you very much for your time. I really appreciate that.
Yeah, thanks for having me. I had a lot of fun.
Thanks, mate. Cheers. Okay, bye.